Hello, I'm Wayne Heili, the Managing Director and CEO of Peninsula Energy. Peninsula Energy today is actively working towards bringing our flagship project, the Lance Project, uranium productions in Wyoming, USA, into production. 2024 is going to be a turnkey year for us. We set the stage in 2023 to bring the project to a more independent and fully capable uranium production project. We'll be producing dry yellowcake at a production rate target of about 2 million pounds per year, moving in 2025 and beyond. But we are now actively constructing the back end of our plant and getting ready for that production run, which we expect to start in late 2024. So we can talk about all of the events that brought us here and how good we see the future moving forward.
Oh, we will. We're going to talk about them, Wayne. Firstly, a lot of shot in the market. The best thing that Peninsula can do is get taken over. Do you agree?
Not at all. We have the chops. We are the team. We have a very unique opportunity. We have the team that produces uranium. Of course, people would love to take us over because of our team, and that's what everybody needs, is a team like Peninsula's. But we have the capabilities. We've worked hard over the last year to get ourselves prepared and to be in a unique position. It would be sad for such a thing to happen, and that's not our ambition at all, Matt.
Okay, but why is the position you find yourself in defensible? Okay, you're talking about others wanting to take over because you've got a great team. I think the market is saying you got to take this company over because the asset's good, but it's all over the place. So you worked hard last year. What did you do? What makes this company defensible?
Yeah. Well, look, previously we had a plant that was a satellite production facility. A satellite production facility means that we could produce uranium onto ion exchange resins, and we relied on a third party to take those ion exchange resins and produce the final product, yellowcake. Last year, in the middle of the year, we lost the services of that third party provider, and we had to move to establish that in-house capability. So that's what we're doing this year. We're building the back end of the plant. We're going to be able to not only produce dry yellowcake ourselves, which is not an incredibly technical process. It's something everybody on our team has done for many, many years. We're also expanding the capacity of our facility, because when we're doing it in-house, we can do it cheaper and we can do it more efficiently. So we're moving from a little under 1 million pounds a year up to about 2 million pounds a year to get started. So, we're going to be a stronger and better company because of the hard work that we put in the second half of last year.
Okay. Doing it in-house, cheaper, and you're going bigger. So that's something. But, time's a killer here. Obviously that was a curveball. What's that done for your balance sheet? You talked about raising some money in November, $60 million, whole chunk of money, to get into production. Where are you with that process?
Look, we did the capital raise. Look, our shares underperformed the sector this last year because the market expected us to be raising capital. And we were very clear in communicating our need to raise capital to build the back end of this plant and to up our capacity. We completed a placement which was approved at our EGM, which occurred January 10th. And so it's just freshly approved. The shares are, the placement for $50 million Australian is complete. And we've opened up an SPP, a share purchase plan for our existing shareholders to participate at the same pricing that the institutional investors got. And we're raising another $10 million through that SPP. That's open for the next 2 weeks. I think it closes around the end of January, the 24th. I'd encourage all of our existing shareholders to take this opportunity to get these shares at the pricing that we offered, and watch this company grow with the funding. Because this SPP really establishes that we have the funding now to get us back into production. The SPP and the placement in combination, and along with that, Matt, going forward, we offered some options that are priced in the money at the moment. And we expect that we'll be able to raise as much as 40 million additional dollars through the exercise of the options in the year to come. So that's going to give us the additional funding to move the operation forward once we are back in production. So
okay, and so just on the SPP share plan process plan, that's just open to the ASX shareholders and not to your OTC shareholders. Is that right?
That's right. Yeah. It was limited to the ASX, the Australian, New Zealand shareholders. They're the ones who are capable of participating in the SPP.
Right. And let's be really clear about the allocation of this capital. Obviously, the options you expect maybe an extra 40 million, but let's not clear that for now. 60 million, does that get you into production? Are you producing yellowcake?
Yeah.
And selling it? You're in revenue, yeah?
Yes, that's the point. That was the point of that pricing or that target level of fundraising, was that it's a sufficient amount for us to complete the plant construction, complete new well field construction over the course of 2024, and to get the project back into production.
Okay, and then if I look at, like I say, you had a difficult year last year. You had a couple of curveballs thrown at you, and yes, expectation you're going to raise money, it's going to depress the share price somewhat, but that's life. You got to get on, right? So what do you think people need to understand about where your company's at? You're saying you don't want to sell, you want to get this thing into production. What are people looking at? Is it the increase in target production that they should be looking at? I mean, how do I value you now?
Well, look, we haven't really seen the price appreciation that most of the sector has seen while the uranium price has increased. So we're rather, we've been held back with the prospect of a capital raise. Today, I think our share price is really spring loaded. We're in a great position moving forward. We have the money that we need. We have the people that we need. We have the plan in place. Today, 2024 is about execution and getting the construction done and ready for production. 2025 is going to be about a significant production year. But we have so much in front of us right now, Matt, that is good. There's so many good drivers for Peninsula today, and the markets for uranium that I think people just need to look at us with a fresh set of eyes and say, yep, they had a tough year. But wow, look at how they addressed it. Look at how they took that on head on and just did the business, building the business to be a uranium producer. That's what we did in 2023. And that's what we'll shine in 2024.
Okay, you kind of, like I said, you've lost a bit of time and momentum because of having to kind of redesign the whole kind of process and engineering that you're now going to do in the house. Where's that put you in terms of the competition? I'm looking around at people talking a lot, but not a lot of people getting into production. And if they are talking about it, not anytime soon. So where does that put you in terms of your negotiation in terms of getting contracts in place, whether you're selling into the US market or, pricing negotiations by one of being the first movers? It's obviously a position of strength if you can show that you can, one, ramp up and get anywhere near the scales that you're promising. So where are you with all of that?
Yeah, well, I think the disappointment from 2023 was that we were intending to be in production in 2023, producing with our satellite facility and relying on a third party, at a higher cost production. But it was a good opportunity for us to show that we could produce the uranium with the new pH in-situ recovery process that we're implementing. Look, we've proven that to ourselves over and over again with field demonstrations and laboratory. We're very confident in the technical. This is not a difficult project. It's not technically, beyond the capabilities. It's not stretching the idea. It's really, about in-situ or uranium mining in general. It's a standard and well-known process. We're going to, continue to get the project ready and then just be ready to demonstrate it. So I think for the future, the question, Matt, Could you reiterate?
Well, I think where I kind of want to get to is saying, right, you'll be one of the first movers in terms of actual production, actual yellowcake you can sell.
Right.
That's very powerful, I think, because there's, like I say, I'll say it again because it kind of annoys me. There's a lot of chat about the theory of being able to produce this stuff, and not a lot of people moving when they said they would. And maybe they've got a different strategy, which I'm not aware of. But it seems to me being a first mover is really, really important in any sector, any space. Get those contracts, at least get some contracts going, even if you want to kind of hold the rest of your inventory back. But not a lot of people are actually able to deliver this. And so I think that's kind of good for you. The other thing is ISR projects, for about 50% of the global market, should be high margin. Where are you in terms of understanding or re-understanding the economics of what you've got here and being able to kind of share that with the market?
Right. Well, first of all, I think our all-in sustaining costs that we're projecting are around $50 a pound. So, looking at a spot market and a long-term market in the 60s, we're testing now ceilings of $100 a pound in long-term contracts. This will be a very profitable and good margin project. Peninsula is very comfortable with our contract book today. We are not one of the companies that need to go out and secure a whole bunch of new contracts. In fact, over the course of last year, our contract book was a concern for our investors because they said, how are you going to be able to meet your contract requirements when you're not getting in production in 2023 as you planned? We worked with our customers. We have a terrific customer base, and I really appreciate their support. We rescheduled all of our deliveries. That's finalized, and we don't have any delivery obligations in 2024 as we get the project ready. And so, we're very comfortable with our contract book and our customers. We'll look to take on some higher priced, contracts, because we only have about a third of our target production rate under contract. That means we have a lot of exposure to blue sky. People miss that point. At 600,000 pounds a year contracted, and an ambition to produce closer to 2 million, 1.8 to 2 million pounds a year. We have a lot of blue sky in this company. So, the contracts, they're legacy contracts, some of them still very good priced. People are signing contracts today that we had pricing, in our books for a long time ago.
Okay, well, I get that. But, with that 600,000, are you making money? I mean, I know, these contracts have friction levers and, premiums, etc. But you're still making money on that 600,000 pounds. Right?
Absolutely. Okay. Yeah.
Right. And the blue sky and anything above when you kind of get there as this ramp up.
And again, because I think, we've talked about this in the past. We had we have an all-in sustaining cost around $50. Our contract book projects to have sales around the mid 60s to the high 60s on average. So yes, there's money to be made in every pound, the contract and the blue sky.
Right. And so you're saying that, okay, tough year. You've been through sourcing it out technically, bring stuff in house. The margins seem acceptable. You've ramped up the production, the target production numbers into a extraordinary market from two aspects. One, prices, the cost of producing yellowcake and other commodities has shot up. There's a new reality to mining now. And secondly, a very high price environment for uranium, certainly on the spot, and obviously there's a view contracting will follow a little bit slowly behind. So again, what do you think we as investors need to understand that kind of new reality, and perhaps some of the firm favorites need to update their numbers, and perhaps what do you think that's going to do for the sector as a whole, despite all this kind of fervor we're seeing?
Well, I think one of the consequences of us having to press reset was that in the middle of last year, we updated our project economics, and we took full and comprehensive look at the project economics. So the numbers that I talk about today are fresh. We had gone through an extreme period of inflation. Now that inflationary pressure has subsided. And it's really been subsiding subsequent to the period of time that we did our update. So we feel very good, confident about our projected costs and pricing and production moving forward. So we have a fresh look. Some of the freshest looks are really, a lot of guys are still way behind. They're telling you about their projected costs that they did in 2020, 2019. Be careful with that, because there's a lot to be considered from those pricing projections that were done in that period of time. But again, Peninsula has been on the front foot, giving current updates of pricing, even when it's slightly painful to say, yeah, prices have gone up, and it's going to cost us a little more. But wow, the price of uranium this year very clearly outperformed, or increased at a rate much faster than the cost of production. So, it's now a situation where if you have a uranium mine that's licensed and ready to produce, and we do, then the question is, why aren't you producing at it? And for us, the answer is we got a little more construction. We're gonna be fully independent when we're done, and we're really happy about that. We're in a great place. 2024 is going to be an important year, but I see the uranium market not fizzling in 2024. I see it. I know, and I think it's pretty accepted wisdom that 2025 is the year with probably the tightest supply against demand in the projections. People are thinking that more supply will come into the markets in 26, 7, and 8. It takes time. People have to be moving to get their production going. We were set back. I'd have loved to have been producing in 2023. That was the ambition. That was the goal. And it was disappointing that, the path that we ended up having to take. But, we faced it head on, and we're ready to have a very successful future.
Okay, 2020. I don't think uranium. I think we all understand uranium's not going to do a lithium on us in terms of that price project. I think there will be a price spike. Don't get me wrong. I think it will, because I think a lot of the production that's mooted about getting arriving will not arrive as advertised. So I think we're going to take that as read. We're also going to take as read that with that supply deficit, that I think the peak will last longer, but we'll hopefully settle down to something slightly more reasonable within. Pick a number within a couple of years time frame, within a 3-year time frame, depending on supply. Who knows? Because the demand is definitely there. So again, what do you think that means for public uranium companies on the TSX, how do they kind of message and signal to people outside of natural resource investing, outside of uranium investing? Why should they be confident and comfortable looking at juniors in this space? And why have uranium juniors got a better chance of success than regular, say, gold juniors, which perhaps have a kind of 1 in 3,000 chance of actually making it over the line?
Yeah. Look, the world needs more uranium production. That's been a theme for a long time. And it's the juniors who bring that new uranium production into the market more so than the majors. The majors can bring some big mines in, but we all know that, the supply and demand projections take into account the major mines that are expected to come online. And there's a deficit in everybody's projection on supply. There's just a supply deficit. It doesn't matter going forward. There's so many drivers supporting the uranium sector right now. The COP28 results, the possibility that Sprott and with its physical uranium trust could get back into the market and buying in a big way. The U.S. government, wow, what a wild card if the Russian import ban, which is looming large in the market right now, comes to pass. We think that there might be Senate approval on that this month, and I remind you, the U.S. House has already approved that back in December. So with the Senate and the House approving a Russian import ban, what does that really, what are the consequences? I think there are material consequences to the availability of uranium and the price of nuclear fuel. there's so many catalysts, so many drivers supporting an upward moving market for several years to come that, my guess, my thought process today is that, we saw the spot price go from $50 to 90. It's 94 now. But it was
96 today.
Huh? 96? You're seeing
96 today.
Yeah.
You have 6, 310.
So
conversion 60. It's
nuts. $100 really soon. But the bigger question is really, when is it going to hit an all-time high? The all-time high being $136, $138 sometime in 2024. Look, it's a market. It's going to go up. It's going to go down a little bit. It's going to move sideways for a while. It's going to respond and it's going to absorb, price movements. But it's loaded now to see, significant upward. There are people, look, the people who are pumping the market, the people who really think it's going places are talking 200 and more, 250. I think for 2024, for us to reach an all-time high and settle in at an all-time high is a good objective, and will be a likely outcome in the uranium market. It could go as high as 200, but again, I think it's a market. It's going to come back. It's not there forever. So we take advantage of it, and companies that are ready to produce can really take advantage of it. I think you were asking the question, where does it put us? Now that we're not maybe the first one back into production, but we still have some significant production plans. We have been, regularly in contact and communicating with utilities. We have a great respect from the utility community. They know that we were serious about production in 2023. They know that we're still a serious uranium producing contender, a company, and they do want to do business with U.S. producers. So we have a lot of opportunities in the market. Again, we're a little bit choosy because we already have a significant contract book. But we're also very happy to entertain opportunities to improve our contract book with additional higher priced contracts.
Okay. You sound confident. Do you feel confident right now? Or is it a case of, it's been a tough few years and we'll see what the market throws at us in 2024?
We've been tested in fire already. I don't know what 2024 could do to us that 2023 didn't already. And this is a strong team. This is a good group. And I'm very confident that the project is going to be a good producer in the future. So, look, it's not always the path you see and expect, but the path that you take, you either sink or swim, and we're swimming strong. We're some of the strongest swimmers out there right now.
Okay, Wayne, look, appreciate you coming on. Like I say, after 2023, I'm sure there are a few dark days. I mean, very quickly can change the strategy. But as you say, if you can get this thing up and running and producing and selling into contracts, I think the market may take a very, very different view of things. So I appreciate your time today. Thank you.
You bet. Thank you, Matt. It's been a pleasure.